Kiwi downside pressure remains as recent data signals sluggish growth. US dollar downturn expected once Fed commences easing, but may not play out. The new week has commenced in typically quiet fashion given the absence of market-moving catalysts and news flow through Monday's sessions. Global equity markets, major currencies and rates markets have traded in relatively tight ranges following on from last week's flood of central bank meetings and numerous Tier 1 data releases for various developed economies. New Zealand joins US, UK in accusing China of malicious hacking. New Zealand joined the US and UK in accusing China of sponsoring malicious cyber activity targeting democratic institutions, saying its parliamentary network was breached in 2021. The Government Communications Security Bureau has established links between a People's Republic of China state-sponsored actor and hacking activity targeting parliamentary entities. Judith Collins, the minister responsible for the GCSB, said in a statement Tuesday in Wellington. Hints of a yuan versus yen currency war. The cost of a chronically weak yen just grew by $18 trillion as China's economy, Asia's biggest, may be joining the race to the bottom. It's still unclear if the drop in the Chinese exchange rate that began Friday is the start of a trend that would surely rock global markets or just a fluke. But the correlation with the Japanese yen's decline is hard to ignore. Measuring Fed inflation credibility. Median 3-year CPI inflation forecast, black, 25th, 75th percentile, gray, in percent. CPI inflation consistent with 2% PCE inflation target, red dashed line. Number defined peak to trough recession date shaded gray. Source, NY Fed, NBER, and author's calculations. As of February 2024, the inflation rate expected 3 years out is lower than it was in January 2021. While expected CPI inflation has declined, dispersion of forecasts has increased slightly. Consumer climate, sluggish recovery. Consumer sentiment in Germany continues to improve at a slow pace in March. While expectations regarding the economy and income increase slightly, the willingness to buy remains low. The declining willingness to save has a positive effect, with the consumer climate improving for the second time in a row. In the forecast for April, the indicator increases slightly by 1.4 points to minus 27.4 points compared to the previous month, revised to minus 28.8 points. These are the findings of the GfK Consumer Climate powered by NIM for March, which has been published jointly by GfK and the Nuremberg Institute for Market Decisions, NIM, the founder of GfK, since October 2023. Thank you.